Good morning. We will pay attention to VAT today. You are provided with information relating to Amy's clothing store, and all the goods are subject to 14% VAT. Invoices received from suppliers. That is when we buy goods. Therefore, we can claim the VAT that we pay on these goods back. When we receive the goods, we pay VAT and we can claim it back from SARS. So that will increase my VAT input with 70,000, or I can show in the VAT control account that I will debit the VAT control because it is an asset to me. Invoices issued to customers. We are selling goods to them and we collect VAT on behalf of them. Therefore, we have to calculate the VAT. And the difference between VAT exclusive and VAT inclusive will give us the VAT amount. Or you can say 820,000 times 14 divided by 114. This VAT is paid to SARS, so it will be VAT output, and we will record it in our VAT output account or in the control account on the credit side, because we have to pay this money to SARS. Credit notes issued to customers. We give a credit note to our debtors when they return goods. Therefore, we have to work out what is the VAT on the amount that we give credit. VAT exclusive is 60,000. If we want to calculate the VAT, we will have to calculate 14 over 100, because exclusive means it's only equal to 100%. The VAT is 14%. And VAT inclusive is 114%, times the amount for the credit note that we issued, 60,000. And that will give us the VAT amount. This credit note that's issued to the customer means that we don't have to pay this VAT over to SARS anymore, so it will decrease the VAT that we pay to SARS, so VAT control or VAT output will be debited. Credit note received from a supplier means that we return goods to the supplier, and inclusive in that amount is 5,600. When we originally purchased the goods, we claimed back this 5,600. Because we received the credit note, it means that we can't claim this money back from SARS anymore, so it will decrease the VAT input, or I will record it on the credit side of my VAT input or VAT control account. Goods taken by Amy, the owner, for personal use. That is VAT inclusive. So if we want to calculate the VAT, it means the amount that's given to us is 114. The one that we want to calculate is 14. So the one that we want over the one that we know times the 14,250 will give us the amount that the owner will have to pay VAT. This VAT must be paid over to SARS, so it will increase the amount to SARS and will be recorded on the credit side of the VAT control account, and it will increase the amount that we pay for SARS. Bad debts written off. When we originally sold the goods, we paid VAT on the total sales. If bad debt is written off, it means that we don't collect this 2,100 from SARS, so it means that it will reduce the VAT output that I have to pay to SARS, so it will be recorded on the debit side of the VAT control account to indicate that we owe less money to SARS. The easiest way to do these calculations is to write above the total the 114 and 114. So every time when you want to calculate a figure, the percentage that you want over the percentage that you know. Amy has not submitted a VAT return. John Smith is the internal auditor. He has noticed that an invoice including VAT for purchases from KwaZulu-Natal wholesalers amounting to 200,000 has been signed by Amy and recorded by the bookkeeper. On investigation, he discovers that KwaZulu-Natal wholesalers does not exist. So this indicates fraud. So she puts invoices into the business, pretending that she's buying goods for the business and paying out money for goods that was not really purchased. So that means on this goods purchase, the 200,000 that does not exist, she claimed back the 14% VAT. And because she increases her purchases, she will also increase her expenses that will reduce the profits, so she will also pay less income tax on the profit she made. What would your expected response be? This is illegal, and tax evasion could lead to arrest and you can go to jail for it. Expected response for 2 marks means that you must say that this is fraudulent because the incorrect information is given to SARS, less money is paid on VAT to SARS because you pretend that you purchased goods and you claim back the VAT. The internal controls in the business are being circumvented by someone working in the business or by the owner. So either the employee or the owner is responsible for this fraud. If you only have to answer this question for 1 mark, you can only just say tax evasion, internal controls is not good enough, or it's unethical. So look at the question, determining the marks to determine what you have to answer.